Good morning, everybody. Happy Monday. It's November 28th, 2022. Great to be with you today. And obviously, that song is Fame for Irene Cara. Rest in peace. She passed away over the weekend, 63 years old. If you're my age or maybe a little bit younger, you remember she probably had a big impact on your life with not just Fame, but also Flashdance. Some of you remember that movie. So um, her legacy from those shows, movies, and so forth will live on. So um, great to be with all of you today. Let's talk about markets over here. So we had a pretty positive week prior to Thanksgiving, and Friday is just sort of a flat, rather modest doji day. Let's take a look at that. And that's the SPY. Let's go to the S&P 500 first. You guys can see here that this little. In fact, let's expand that out a little bit more. See that very, very tight range on Friday, short trading day, of course, 3.5 hours before the market closed. But we did have a very, very tight range in that day from 40.20 on the low, 40.34 on the high, so 14 handles. Pretty much muted volatility on Friday. So we're getting some of that volatility back here today, of course. And we see the S&P 500 futures are down about 28 handles. The Dow is down 181. The Dow, of course, has been the strongest index of them all for the past couple of months and has been leading the way and is up over 34,000 now. The NASDAQ, of course, has been the weaker of the indices, along with the S&P 500, but the NASDAQ, is down under 11,000. Under 12,000, about 11,700 right now. So, a lot of these big names that are in the NASDAQ index have been hit rather hard. The Amazons of the world, Googles, Microsofts, Apples, and so forth, and they're peeling off a little bit as well today. So we take a look at the a little montage of stocks that I keep on the board over here. We can see names like First Solar are down. This is a name that's been very, very strong lately. It's down a little bit. Tesla's down a few dollars this morning. Apple is down about 3. Of course, is leading the NASDAQ and the SPY down a little bit as well, too. So Chinese names, rather mixed today. A couple of names that are up strong, like PDD, Pinduoduo, are up good. KWeb is actually up a little bit. A lot of protests going on in China right now, causing a lot of turmoil. The S&P futures came down off of that news last night. And again, it's spilling over into some areas that we're not sure are going to get hit. And remember something, when uncertainty starts to rise, we don't know how things are going to resolve, like this situation, where we see volatility start to rise up. So where's the VIX right now? The VIX is, of course, is up 1.6 points here. It's up about 8% this morning. The VIX had closed right near 20% by the at the end of trade on Friday, and you can see the VIX chart over here right now. It's just been a steady decline. We had several days up here that were in the 30% range, and it seemed like nobody was really interested in buying more protections. We would have some down sessions. Remember, from back in September and early part of October, nobody really wanted to buy any more protection. They already had it on, and we're letting it go, probably just waiting for news to happen. So just waiting for the Fed potentially to pivot. Now, of course, the CPI number, which came out in November, caused volatility to fall sharply through the 200-day moving average. And that's what we saw, what happened right over here on November 10th. So, certainly this lead down in volatility is sharp. And, we think that even during this bear market rally, which we had back in June and July, and then even in March, look what happened here. There was a lot of talk back here that the Fed was going to that inflation was peaking, and back over here that the Fed was going to pivot. And Chairman Powell said, no, that's not true. And remember Jackson Hole. So there's a lot of speculation going on right now in the markets. There's a lot of speculation that inflation is going to be less of a worry going forward, but more of a worry about economic growth and weakness. And so I guess the conventional wisdom here is that, okay, well, we already know that, so we don't have to price in any uncertainties because we know that the economy is going to be rather weak. And actually, on the flip side of that, it's actually showing some good strength in the economy with retail sales last month, job growth as well, and then credit card numbers are actually really rather healthy. So. But then, on the other side of that, there's the manufacturing sector, which is showing quite a bit of weakness. The PMIs that came out last week were showing weakness as well too. So, which way is the money going to flow? And that's all we really care about. And we're going to pay attention to where the money is flowing. And if it's flowing into stocks, we'll add some. And if it's flowing out of stocks, we'll continue to add protection going forward. So, as it is right now. So, okay, let me step back just a second because we know volatility has been down sharply. It's down about 21-22%. For those expecting large drops, they don't generally happen with immediately instant drops in one day or something like that. They're not going to happen when the VIX is down in the 20% range because volatility is not to the extent that we're looking for ginormous moves. They tend to come in clusters, but certainly with the volatility down so far as it is right now in 22% range, it would not surprise us to see us get back at least to the 25 area on at least the 200-day moving average, maybe even the 20-day moving average, right back up to about the 23 and 23 and a half, 24 area. But this is something that we got to pay attention to, right? Back up to 25, that's going to be about a 15 to 17% rise in from here in volatility. That's going to shake up the markets and probably look to see the markets drop back down to about 3,900 or so, maybe a little bit less than that. What we closed at 40.26 on Friday. And certainly we have a gap open at 37.50 and change. This is the CPI number. Where does that gap close? It closes down here at 37.49, right? It's certainly something that not very many people are looking for or expecting to happen, right? Because here we got a nice series of higher highs and higher lows, but we had that months ago, back in July. And we had that over here, June, July, and we had it even further. If we look back a little bit more, back in the spring as well too. So huge move back in March into April, and we had that calamity down over here. But as far as I'm concerned, until we get a big break in that 200-day moving average to the upside, every rally here is a bear market rally. Good rally, don't get me wrong, right? Off of 3,500 up to 4,500 points. It hasn't been in a straight line. Of course, it's been really sloppy, not like we had in the summertime where you're continually chasing it upwards here. This is more recognition that this market rally is of disbelief, and it should be. It should be very difficult to believe that the markets can rally over here. Look, I'm not fighting and I'm not arguing with what money flow is doing here. However, you have to recognize that resistance is right here, right? Resistance is right here. Until that changes, you have to play it accordingly. So it's good to have some protection on. I urge all of you, take advantage of buying some puts right now. They're cheap. Maybe go out a month. Maybe go out 6 weeks. Maybe go out to the December 31st options that expire at the end of the year. Do something like that and add some protection here, okay? Because if you have some calls that you bought last week, and we talked about this in the chat room on Friday, we talked about it on Wednesday. If you had some gains, great, take some money off the table and add some protection. That's just what you do in a bear market. And yes, folks, we are still in a bear market. That's what we're in right now. Okay. I don't care if the Fed is going to stop raising interest rates. As long as they continue to keep interest rates high, it's going to be a challenge for these companies to make money and produce profits for their shareholders over the next couple of years. So that's going to compress multiples as well too, and we're going to see this bear market continue to live on. Again, you hear a lot of narratives out there, a lot of rhetoric out there. The bear market's over, inflation is gone, blah 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 blah. Inflation's not gone, okay, and we're going to see that in the numbers, maybe coming down, but it's not gone, right? And it's not to the extent where the Fed can stop raising interest rates. All right. So that's that. I want to show you a couple of other charts as well too. This one here is new highs, new lows. We talk about this quite a bit. They're starting to look a little bit better here, right? We're starting to get some improvement in this new highs, new lows on the New York Stock Exchange. A couple of closes above 100 would be positive here. But again, we tried to get up there back in the summertime, and we just couldn't break through, and then we fell apart in September. And then we tried to get through back in the spring, and then we fell apart as well too. So you have to once is a chance, 2 or 3 times is a pattern. So we see a pattern here of breaking down on the new highs, new low list. When the breath breaks down like it is right here, okay, back in September, that's no bueno for the markets, okay? And you can get in front of that move by, again, as I said today, just a few minutes ago, add some puts. They're cheap. They're not expensive here, right? Because the market is not expecting big, ginormous moves. But if you get one of these big moves where the S&P 500 falls, say, 2% or 2.5%, and it becomes a risk-off day, you're happy that you bought some puts, right? You are, and then you can roll them down or sell something below it, that sort of thing. So take advantage of extreme volatility that could occur over the next several days or weeks. Okay, we do have the end of the month coming up on Wednesday. We do have a speech by Chair Powell coming up on Wednesday morning as well too. I already seen some speculation from Bloomberg of what he's going to talk about. Of course, that's unless something was leaked. It's always the case. He's apparently going to talk about how they're seeing a path to lesser interest rate hikes than we've had recently. So I know there's been a couple Fed governors who have hinted at that as well too. I just don't see a path to rates stopping at, say, 4.5%, which would be another 75 basis points. I think we're at 375 right now. There is a 30% chance of 75 basis point rate hike in December, and we could get a little bit more coming in the spring. I'm thinking at 5.5%, maybe up to 6% is probably where we're going to go, because I think this persistently high inflation is something that the Fed really has to get ahead of, not catch up to. Right, get ahead of the inflation, not catch up to it. All right. So that's going to be it. I wish everybody a great day, and take it easy, take it slow. Don't do anything really drastic, anything big, and it's going to get you in trouble here. And we'll be back on Thursday. Thursday is the first day of the month, of course, December 1st. It's going to be great to be with all of you. And for our new people that are in the chat room, welcome. And today is Cyber Monday. Don't forget, we do have a nice sale going on for anybody who has not been in the service before. This is for brand new people. 2 weeks for $49. Come and get access to the chat room, the EO service, and the spread trader. Total access for $49 for a couple weeks. Take it for a test drive. You can't get that kind of price anywhere on earth. Have a great day, everyone, and I'll see you guys on Thursday.